Hey, and welcome to Tax Talks by the Tax Queen. My name is Heather Ryan. I'm an enrolled agent, which means that I am licensed by the IRS to practice taxes or represent taxpayers in all 50 states. And I am here to talk about tax topics, right? So today we're going to talk about LLC versus S Corp. Because this is kind of misunderstood topic, I really wanted to go over it and make sure that people were clear on what all the terms mean and the letters, right? LLC, S Corp, we're throwing all these terms out there. And I just wanted to make sure that they were clear and it was understood what you were doing when you register certain things. So let's dive in, okay? First, let's just talk about being a sole proprietor, okay? Having a sole proprietor business is actually very popular in the United States. There's no registration involved, and therefore there's also no extra cost to getting started. There's no basically roadblocks. Okay, people just start. You work under your legal name using your social security number, and it's pretty straightforward. A lot of people start that way. It's really great for the small business owner. Not a big deal to start that way. You might file a DBA, which stands for doing business as. Sometimes it's called a fictitious name or a trade name, depending on the state you're in. And I'm going to give you just an example so you understand what a DBA is, because you can be a sole proprietor and file a DBA with your state and that's the only thing you file, so that you can operate under a different name. So for example, as I've already introduced myself, my name is Heather Ryan. So I can be a sole proprietor and operate a business under that name, Heather Ryan. I can use my social security number. It's perfectly legal. It's within your rights to operate that way. However, if I want to use the name Tax Queen, I have to file a DBA, because now I'm no longer operating under my legal name. I'm using a different name, right? Tax Queen. So I would file a DBA, Tax Queen, and then I'm legally able to operate under Heather Ryan, DBA, Tax Queen. I'm still going to use my social security number, but this is a perfectly okay to operate as a sole proprietor business. As a sole proprietor business, you are responsible for self-employment taxes, and this does catch a lot of people by surprise. It's 15.3% of your net profit on your business. Okay, so that's your social security and Medicare. You owe this on the net profit of your business, and you can owe self-employment taxes without owing income tax. Should I repeat that? You can owe self-employment tax, so your social security and your Medicare, which is 15.3%, without actually owing income tax. And I know that sounds maybe a little strange, but it is a fact. And the self-employment tax they catch a lot of people by surprise. So just be aware as a new business owner that you have self-employment taxes. So as a sole proprietor, you would never run payroll for yourself. So that means that you would never get a salary and receive a W-2 at the end of the year, like you may be used to when you work for a different company, okay, an outside company. So they pay you that W-2, or they pay you a salary, you get a W-2 in January to report that income. There is none of that as a sole proprietor. Now, if you have employees that you use in your sole proprietor business, you can pay them a W-2, but you would never pay yourself with payroll, a salary, or you getting a W-2. Okay, so that kind of covers the basics of being a sole proprietor. Let's move on and understand what LLC is, because this is a huge term or topic. I hear a lot of people, ask me questions, I'm going to be an LLC, or they just say, hey, my friend told me to be an LLC, or I was recommended to register an LLC, and they don't really know what that means. So I just want to make sure that you understand what that means when somebody recommends that, or you go and register yourself. So LLC stands for Limited Liability Company. This is registered strictly with the state. Whoever you're registering with, it is not with the federal government, okay, not with the IRS. It's a state-based entity structure. And this is really there to help limit your liability, right? Exactly what it stands for. If you're curious about what that means, it's basically, working to protect your personal assets. I want to preface, I am not a lawyer. If you're worried about protecting personal assets, please speak to a lawyer. But the basics of the LLC entity structure is to help separate business and personal, which is working to a little bit, offer a little bit of liability separation and protection from personal assets. There is no guarantee. I'm warning you that right now. There are some things you can do, and we're going to kind of go over that to help you make sure that LLC structure is kept intact. So why would you file it? Okay, again, it's that liability protection. The cost can vary according to your state. I have seen it as cheap as $50, all the way up to the state of California is $800 to maintain an LLC. So you can be anywhere in between. There are a few things that you have to do annually. Most states like to see an annual report, and this is really just making sure that the contact information for the LLC is kept up to date with the state. So should they need to get in touch with you, anything related to that business, they have the correct contact information. That's a mailing address, that's a name, and there's usually a slight fee for filing that every year. It's definitely not cost prohibitive. I do recommend the LLC structure for many people, but you have to know if it's right for you. So the other obligations of having an LLC is the first thing when you go and register with your state, or maybe step 2, we'll say, is to get an EIN. So that's your employee identification number, and that's by the IRS. It's absolutely free to apply. You can go online and usually get that PDF letter immediately as soon as you finish out the application. Once you have those, I would go to a bank and open a separate bank account. So this is a really important step, and this is what's going to help separate you personally from your business assets. Okay, having separate bank account. So separate bank for your personal, separate bank for business. And none of the funds get commingled. And what do I mean by that? You don't take income into your personal account. All income goes into the business account. And you also don't pay expenses out of your business account for personal items. Okay, only business expenses come out of the business account. Having a separate bank account, you can also have a separate credit card. You can possibly get loans for the business if that's something that you're looking at, but just make sure that everything is literally separate from you and your personal items. What else? So a sole proprietor and an LLC, so a single member LLC, is a sole proprietor for tax purposes. So either way, you would file a Schedule C on your 1040 to report your revenue, your expenses, and your net profit. Again, you're going to pay or responsible for the self-employment taxes. Let's just repeat that because it's important. It's 15.3% of your net profit from the business. Okay, that's your Social Security and your Medicare tax. So you're paying into your future and collecting in Social Security and getting Medicare. Contrary to popular belief, there is no tax benefit to being a single member LLC. And this is a huge hiccup or a lot of misunderstanding that people don't realize that there's no tax benefits to being an LLC. You're still that sole proprietor. You still have self-employment tax. You still have no W-2 for yourself, so no salary. It's really from the IRS level and a tax treatment level, LLC, single member, exactly the same as a sole proprietor, no difference. So just be aware. Hopefully that clarifies that a little bit for you. What about if you're a multi-member LLC? In that case, things do change a little bit. A multi-member LLC is by default a partnership. A partnership has a separate tax return. It's a Form 1065, and it reports its income completely separate from your personal. When you file that form of the partnership return, all partners receive a form which is then used to fill out your personal return. Okay, so again, multi-member LLC is a partnership by default, even a husband and wife. Just telling you this. There are exceptions to this rule, and if you think you fall into those exceptions, please reach out. You still pay self-employment taxes because you're still self-employed. It's based on the percentage of ownership of that LLC. So that partnership, if it's 50-50, if you have 3 members, is it 20 and 50 and 30? Hopefully that added up to the right amount. And yeah, so it's really similar, to what would be a single member, except now you have multiple people in there and multi-members. So just similar treatment though. And you still would not have a W-2 for any partners in the business. It would still be, self-employment income. It's all, shows up on that form. Once you file the 1065, what you get is a K-1. That K-1 is used to report your income on your 1040. And if you're confused by any of this terminology, please look it up further. Please ask me questions. I do not want you to be confused. I'm here to try to break things down and make it more clear for you. So the last thing we want to talk about is the S Corp, because this is another thing that's thrown out there. So-and-so told me to be an S Corp, and that's great, but I want you to understand it before you go ahead and do it. So an S Corp is actually a tax election, and it's a form you fill out basically that you're electing or choosing to be treated as an S Corp. Okay, so S Corp is a corporation, and an LLC can elect to be treated as an S Corp. So let's just kind of back up. A lot of times people will start as an LLC, single member, and then they grow their business and they're like, hey, things are really going well. People tell me to do an S Corp, right? I'm going to see tax savings. And at that point, I really do recommend talking to a tax professional and making sure you've got all your I's dotted and your T's crossed, and you know what you're getting into. So let's just go into a little bit about the responsibilities of being an S Corp owner or being an S Corp. It can offer tax savings, as I just mentioned, but it doesn't always. And it does come with responsibilities that you must maintain every year. And there's no getting around it. If you get around it, you could possibly be audited, and it's just no fun. So the responsibilities including running payroll for yourself. And that means paying yourself a reasonable salary, or what they call reasonable compensation. So if you've heard any of those terms, that's what it means. You have to pay yourself a salary that would be commensurate if you were to go get your job at another company. So this is based on geography. It's based on, your history as far as how many years do you have in that industry? Do you have certifications and degrees? How many hours you're working in the business? It's also based on revenue. So you can't expect to pay yourself a $100,000 salary if the entire revenue of the business is at $100,000. That's not reasonable, okay, right? That's what we're talking about, reasonable compensation. So it has to be reasonable for your business, your revenue at the time. It may increase as your business increases, as the revenue increases, and max out at a certain amount depending on your industry and what your occupation is. But really, I do stress working with somebody to help guide you on some of this, even if it's just a one-time consultation, because this is really, I don't want to say misunderstood, but it is not always completed properly. And the IRS can come back and say any distributions or owner draws or money you withdraw from the company is then treated as salary, and you have penalties and interest for failing to file certain forms and keep up with things. So I'm really cautious of this, and I really stress making sure you understand that. So payroll does have its own responsibility. You also have a separate tax form, and that's Form 1120S. I'm just trying to give you as much information as you can, you can get here, but really basics. So you do have a separate tax return. Again, that produces a form called that K-1 that is then used for your personal return on your 1040. So let's go over maybe the tax savings, because that's probably what you want to hear, right? That's why you're here. You want to understand. So the tax savings comes, so remember we talked about the self-employment taxes. So you pay your Social Security and your Medicare. So when you have an S Corp and you're paying yourself by payroll with a reasonable salary, you do pay into Medicare and Social Security on that salary. So let's say you have $100,000 of revenue and a $50,000 annual salary. So $50,000 annual salary, you're going to pay into Social Security and Medicare. The business gets half of that as a deduction. So there's a nice little extra expense that you get to take as a business expense. And then the other $50,000, right? Because we only have $50,000 salary. We have $100,000, let's say net profit, not just revenue, but net profit. So I have $50,000 extra that I'm going to recognize on my personal tax return. but I am not paying self-employment tax on it. So that right there is where you see the tax savings. It's that self-employment tax. But there's things to keep in mind. Because you're limiting your salary to $50,000, that's the only amount that you're paying into Social Security. So if that's a consideration for the future, just be aware. But yeah, there is some some tax benefits. Hopefully this clears up LLC, S Corp, sole proprietor, all of those terminology for you. And I hope to see you next time.